Today, India has probably 20 odd people who provide free credit reports. That product itself didn't used to exist even 5 years back. But now, if somebody is asking for a credit report of theirs, in some ways that is an indication of the fact that they are interested in procuring credit, if not now, then sometime in the future. Bulk of growth of India, at least over the next decade or so, would be driven by MSMEs. If you look at the way we have actually developed, even today, purely from an economic growth perspective, just about 60% of India's GDP gets driven by the MSMEs. Now, if India starts growing at 8 or 10%, it won't grow till the time MSMEs themselves grow at that rate.
I feel like this society is far more resilient, far more, I would say, innovative, and will probably serve a 1.4 billion people economy much well than creating systematically large organizations. So I am very bullish on this segment, and it serves us, but it will serve the country as well very well.
How about that? I don't hear many people say this. I mean, it's a nuanced point that it's the micro MSMEs, the SMEs who will drive growth and not the large organization. I mean, I obviously believe in that because India is a bottom-up country. Yes. If you don't have credit, go down to the lowest, to the smallest of villages, you won't have that kind of growth and that thing keeps on expanding. But, it's interesting to hear you say that.
One of the things that as a company we are proud of doing is we have our own models. We actually don't use any of the bureau scores. We use the bureaus mostly as a repository of the information.
Oh, okay.
But we don't use any of the credit scores. And there are good reasons for it. Fact of the matter is those scores are designed for the entire India. By its very nature, what will end up happening is there are lots of good people who probably get slotted into slightly medium risk or high risk or other things. We have to ask as less information as possible to actually compete in the market, because you have lots of people who will say, okay, why don't you just give me your name, phone number and your PAN number and I'll make a decision about you.
Okay.
If you look at it in Samsung product, in the mobile phone financing product that we have, we only ask for these three things. That's it.
Name, address, mobile phone number, PAN.
Yes. And sometimes if you don't give PAN, that's also okay.
And
that's it.
Enough for you to scrape the data and get a profile.
And based on that, we have to make a judgment. Now we have what we call a feature set. So idea is, let's say take bureaus. Now in bureau, it'll give you the same information to everybody who accesses the bureau. Every regulated institution has access to a bureau. The true competitive advantage is who can extract the maximum value. We can extract more than 1 million information value points out of a single bureau report.
Wow.
Yeah.
That's the thing that we have worked on for the past 3 odd years. And that is what allows us that if you give me only 3 information, I am making a decision on more than 1 million points. I just ask only 3 from you.
What's under the hood? Because, if you're able to generate that kind of thing, have you guys really spent a lot on the technology part? Have you got coders, or is artificial intelligence at work, or is there something else that you guys are doing differently from the other people?
I did an MBA, so I have to be very careful about my life choices in the past.
Do you know coding?
I have coded for about 20 years.
Yeah, see, come on, man. You're a coder and an MBA. Come on, you're like the best of both worlds. Yogi, Paddy, I hope I can call you all that. Yeah?
Oh, of course.
Good with that. Thank you so much. Thank you so much for doing this for our listeners. Welcome to Paisa Vaisa. Paddy, you've come all the way from Bangalore. My sympathies to you because it's raining like hell in Bombay, and you're up since 4 in the morning, and you look at the upside there. You don't have too much of traffic in Bangalore, right?
In the morning, yeah. But I think rain in Mumbai is something I've not seen for a long time. So it's good to be here during the winter.
Yeah, especially these wild kind of rains. Yogi, welcome. You're at least out here,
Oh, of course. And this is par for the course, man. And that's what I was telling him.
Folks, I'm back in the studio after a long time and it's raining. Okay, let's get to the episode. Guys, tell us something about Protium, what it does, how old it is, what was the idea, and the regulatory status, right? I mean, are you guys an NBFC or are you guys just a platform? Let's start from that.
Yeah. So we are a fully regulated entity. We have an NBFC license. We got our license in December of 19. Purely from an organizational perspective, this is probably the best company that I've worked in from my own personal perspectives. It's been a culmination of an idea which Piyush had probably around 5 years back.
Piyush
And
being the
Piyush being the founder of the
Founder,
company.
yeah. Okay.
So Piyush used to work for Goldman Sachs. Then he retired as a partner in Goldman Sachs. And then he came to India, and he probably came to India after working in the US for 20 odd years.
Wow,
And
okay.
when he came back, he saw an opportunity. He saw how much India had changed, because guys like us who probably, graduated somewhere in the late 90s or early 2000s. And if you look at India today, it's a completely different story.
Yeah, it is.
And let's say if you have gone from India to the US
You come back,
around
it's a
at that
totally new
time,
thing,
you see a completely different India.
yeah.
So he was inspired by all of that, and he thought, okay, look, this is the time when you can start something in India. It's a happening much more dynamic economy today than what it used to be.
Sure.
And there was this whole unmet demand of the MSMEs and even the standard consumers also. Debt, which used to be a 4-letter word probably 30 years back, today is no longer so. And rightly so. Fact of the matter is, debt is just a means of smoothing consumption across the lifetime of a customer.
Okay.
So today at least the customer attitudes have changed, and we thought, okay, let's start a company which will work differently, which will try to meet this demand by acting on the confluence of various technological factors, on the factors related to internet, about data science, about the fact that customer attitudes have changed. All of these things have come together to create this confluence of an opportunity.
Yeah. So I want to understand, lending has exploded in India for the last, I would say, everything changed after 2016. What is the use case that you guys saw, or, a problem in the system, or an opportunity, let's not call it a problem, an opportunity that provided you with this idea to start this?
I think the sheer volume and the size itself is an opportunity. And the pace at which it is growing, it's magnifying that opportunity. So the compounding effect of lending is going to be proportional to India's GDP. So the thesis is India story to start with. And if India story has MSME at a center, then the MSME story is something that is very robust in the growth story of India. And MSMEs need financing. So it's actually much more easily detectable if you go down the path of saying, I think this is an India bet, and India bet has to have an MSME bet, and MSME bet has to have a financial services bet, and then the logic comes to you actually lending there.
Define MSME. I might have some listeners out here who might be themselves MSMEs. So how do you guys define an MSME?
Well, there are standard government classifications around
Turnover,
turnovers
yeah.
and other things. For us, it's more about the fact that there are customers who are running businesses whose loan typical demand would range from as low as, let's say, 50,000 rupees to a loan demand which could be as high as somewhere around, let's say, 50 lakhs, 1 crore, max to max 2 crores.
Wow,
That's the kind of, let's say, loan demand that they're looking at. Now, from an opportunity standpoint, the one thing that we would want to highlight is the fact that Proteom in some ways is following a model which is the very antithesis of what a typical fintech has done.
Okay.
If you look at every fintech in this country, they all started off with an unsecured story.
Correct.
Their basic idea is give an unsecured loan. While we have started off with the hypothesis that if you have to build a sustainable business in a country like India, it has to have a mix of secured and unsecured. So if you look at it, we are trying to do everything digitally, yes, but we are also cognizant of the reality of this country and realizing that, okay, if you have to build a sustainable business, how do you do it? You have to have a mix of secured and unsecured. So we are actually larger part of the business is providing loans against property. And we also give unsecured loans. Secondly, we are not hell-bent on saying, okay, we will follow only the digital revolution. If you have my app, that's the only way you can get my loan. We actually have more than 90 odd branches in this country.
Wow.
We employ more than 2,000 people, feet on street,
That's
who are
across
going in
the major cities
yes,
and everything. Okay.
everywhere. And our idea is we'll have more than 500 odd branches spread across the length and breadth of this country. Because we are people who are focused on getting it right rather than being rigid bound to a particular philosophy. If something works, we'll do it. If it doesn't work, we'll change our mind.
Okay.
And we'll follow it. So it's always a mix of what we are targeting.
Great. I want to add the digital layer now, okay? Because I like the fact that you actually started this with the old school way of doing it, like actually building out 90 branches across and saying that you'll go to 500, okay? That's actually having what's called feet on street, a presence there.
Yeah.
Let's add the tech layer now, because that has also changed things. Maybe we can make it a little bit more specific as to what's different today that didn't exist maybe 10 years ago. Stuff that you can do now using technology. You just mentioned an app, So let's go into that. Yeah?
So I think the point that Yogi made, and maybe I'll continue from there, for serving India, there is still a large group of people in the country who need assisted digital models. An app is a non-assisted digital model. And if I am going to secure a loan against a collateral, that definitely requires an assisted digital model, plus also a trust aspect. I'm not going to give a property papers to someone over an app. At least India has not reached that stage of digital revolution where property rights can be digitally transferred to another entity. So if you think about the things that we can do now, which we couldn't do maybe a decade ago is a big change.
Okay.
I would say even 3 years ago, pre-COVID, post-COVID itself. I think now we can collect enormous amount of information about the customer with simple consents. Previously, maybe there was very little information you can collect, but now with consent, you can collect a lot of information about the customer. Many parts of India's what you call public good infrastructure that some of the visionaries talk about is made it easy for us to collect and underwrite a customer digitally. And that process can be done for a unsecured loan or a secured loan. Irrespective of the type of loan, we can go quite far in the process of underwriting digitally, and we can do enormous amount of digital transformation in how we onboard the customer.
Yeah.
So I think these two things have
We'll
changed.
get into that. Yeah. I'm on the other side when we come back, we'll get into that. How big is the MSME opportunity? Because I've always thought, and I don't know whether you guys agree or not, that cost of capital in India is like seriously high for people who cannot afford it. For people who can, I get SMSs 5 times a day about free credit card, which is unsecured. I get that. I don't need it. The guy who actually needs credit out there is probably getting it, 1% a month, 2% a month. Okay. So I don't know what's your view about the opportunity in MSME lending that you guys are seeking to solve? How difficult is it? How big is it, etc.?
Purely from a size perspective, I can give you some numbers. Those numbers will definitely boggle your mind. I mean, purely, let's say, take the credit. MSME credit should at least be easily 50% of the GDP of this country. If you have a GDP of more than, let's say, 3 trillion, that's the number that you're looking at. Now, purely from, let's say, the costing perspective, you give an interesting example of a credit card, a free credit card.
Yeah.
Actually, the free credit card is coming at a cost which is higher than what we actually charge in MSME.
I didn't know that. Okay. That's interesting.
We would be charging somewhere close to, let's say, anywhere between 16% to somewhere around just about 28%, while your credit card would actually be 3% per month.
APYs,
And
APRs.
That 3% is actually charged on a monthly basis, while the number that I'm quoting is actually annualized.
Yeah.
So on a monthly basis, it's significantly lower. So let's say that's the cost aspect. Now, if you look at purely from the perspective of formalized lending, the rates are on the higher side, but they're not that high. If you look at subprime lending in the US, it's actually subprime lending in the US rates are twice or thrice as much as what we charge here. While overall, if you look at it, their interest rates, their inflation rates are significantly lower than India. In India, it's difficult to charge anything less than 14-15% because companies like ours actually have to borrow at a rate which is in double digit. Now, if I'm borrowing itself at double digit, then I have to run a business, all those things add up. So, we can actually sort out the pricing problem from that perspective. In fact, RBI, we have a regulator which is in a lot of different ways significantly superior to most of the regulators in the country. They've at least forced the industry to charge a premium which is reasonable but never go beyond it.
Okay.
Yeah.
You want to say something? Yeah.
And when it comes to rate, I think what we see in the industry is a lot of informal credit will start with some minimum amount of formalization and the rates would be higher. as soon as a customer is performing for a limited period, 6 months, 1 year, you will see a sudden increase of people reaching out to him. His or her ability to attract credit or get access to credit increases quite non-linearly because there's so much competition in the market as well. And pretty soon you will see that the person's credit cost is coming down as they perform. So what I hope India actually realizes is it's important to get onto the formal credit path, and within a few years you would be extremely competitive than a person who chooses to delay going down that path.
Yeah.
And I say, any MSME out there, the first thing they need to do is to get into the formal credit, even if for a small business of 30 lakhs, 50 lakhs annual turnover, they have to get into the formal credit. And as their business grows, they will start realizing their business is growing and their cost of funds are going down. And it sets up the right path for them to scale their business.
This is a message, because I'm trying to, hopefully get across on my podcast also, because we've done lending before to MSMEs and all that. And the reason why I also took the credit card comparison is because a lot of the founders in MSMEs use credit cards to fulfill their, because they find it easier, they find it whatever, which I'm not sure whether that's the right thing to do, because one default and you're gone. And like you said, you need these people to enter the formal credit system.
Correct.
And I hope, guys, if you're listening into this and if you know someone who needs funding, then please do check out Proteom. And how are loans these days to MSMEs? They banks and NBFCs have tried to jump in and they've had their own varied experience on it. There was a time when, I don't know whether that still holds right. You have to reach out and give them loans. They don't come to you because, like you said, they're going through the informal route. How is that scenario now? Has it changed? Is it changing? People are more aware now?
I think Yogi would know a lot more, but I think it's changing.
Yeah.
Access to credit, if you look at variables like how frequently people seek credit and so on, and all of that is indicator of a phenomena where people are seeking out.
Yeah.
But it's also true that we have our feet on street where we reach out customers and we bring them onto the formal credit process, especially if they have secured assets on which loan needs to be given. I think there's an aspect of customer understanding how that process works and so on.
Yeah, Yogi.
In a way, it's a circular process. If you look at the last 10 years or so, we have seen the rise of what we call the digital DSAs or the direct selling agents. Now, these are all people in some ways who have incubated a market. They've spent a significant amount of money in trying to, let's say, educate the customers about credit. Like today, India has probably 20 odd people who provide free credit reports. That product itself didn't used to exist even 5 years back. But now, if somebody is asking for a credit report of theirs, in some ways that is an indication of the fact that they are interested in procuring credit, if not now, then sometime in the future. So, and if you look at it, MSMEs, if you have to run any business, loan is a basic requirement. So from a demand perspective, that always existed. Now at least we have channels where supply and demand are getting aggregated together.
Okay. So what lies ahead? Before I get into the Proteom part, how do you think this opportunity is going to shape out? If I can have both your opinions on that, that'll be good. Yogi, you go first and I'll get Paddy's view after that.
Sure. Purely from an opportunity standpoint, bulk of growth of India, at least over the next decade or so, would be driven by MSMEs. If you look at the way we have actually developed, even today, purely from an economic growth perspective, just about 60% of India's GDP gets driven by the MSMEs. Now, if India starts growing at 8 or 10%, it won't grow till the time MSMEs themselves grow at that rate. Now, we have had a government and we have had a supporting economic climate, multiple different changes have happened, which have allowed the MSMEs to keep growing. So, from a pure macro perspective, things look pretty good. From a financing perspective, their demand is exploding. Actually, the single biggest advantage that they have today is the fact that cost of credit for them has actually gone down significantly. Simply because this was a market 5 years or even 5 years back, the number of players in the industry were fairly limited. Today, you have more than 30 odd institutions. And if you look at any of the large banks, large NBFCs, there is not even a single player who doesn't do this business now. From a pure startup perspective also, I can see at least 50 odd new startups which have come in. So, competition has become intense. Financing cost for the people has come down. In some ways, credit culture also has improved. So all of those things have worked. And the biggest factor which will probably change is at least the stress today on by every institution is on the fact that can I digitally underwrite people or not. There was a time when we only had manual judgmental underwriting. Today, almost everybody is focused on trying to make it as digital as possible in a lot of different ways that allows us to better discriminate the customer, to have risk-adjusted pricing. Earlier, the rate was the same. If you're a good or a bad borrower, it didn't matter. As a company, we also have our risk-adjusted pricing. Fact of the matter is, it works two ways. One is, for people who are higher risk, earlier they used to get rejected. Now, at least with the higher cost, they still get accepted. Secondly, the better guys, they get lower rates. So, all in all, it works really well for the market.
And it encourages people to have a better credit behavior.
Yes.
Paddy, what do you think?
So I think going back to the first point that Yogi made, the opportunity set is proportional to the country's growth. And I greedily want MSMEs to be the powerhouse of India's growth. Partly it benefits lenders, but I think it also has a very deep societal construct. Micro enterprise is far more resilient than systematically important companies getting created in a large economy. So as the country grows, if we have a deep set of micro enterprises, it changes the risk appetite of the country. And when I compare it to 2 or 3 generations where safety was through government jobs versus the culture of entrepreneurship through micro enterprises, I feel like this society is far more resilient, far more, I would say, innovative, and will probably serve a 1.4 billion people economy much well than creating systematically large organizations. So I am very bullish on this segment, and it serves us, but it will serve the country as well very well.
How about that? I don't hear many people say this. I mean, it's a nuanced point that it's the micro MSMEs, the SMEs who will drive growth and not the large organization. I mean, I obviously believe in that because India is a bottom-up country.
Yes.
If you don't have credit, go down to the lowest, to the smallest of villages. You won't have that kind of growth and that thing keeps on expanding. But, it's interesting to hear you say that. You believe in that actually.
Yeah, of course.
Yeah, I mean, because I've always thought that this is a bit of a tough nut to crack because it's the 80-20 rule, right? The bigger the corporation gets, the more credit it draws. But if you don't give the opportunity at the, grassroots level, you've seen this changing. This attitude, it's been happening in the last, 5-10 years.
I think it's massively compounding. It's not just 5-10 years. I think every year, if you see the axis of financial inclusion in India beyond tier 1 cities, it's going through a very sharp transformation. And you can see that in how their purchasing pattern, your data consumption, the type of products they buy, whether it is consumption goods, whether it is educational products. I think that economy change is what will drive the country's large-scale transformation.
Okay, guys, let's get into Proteom. What are your specific products? Because your website, I think, has about 3 or 4 which go beyond MSMEs. But if you just explain to our listeners what are the loan solutions that you offer and at what segments are they targeted at?
Mostly from a segment perspective, we target both MSMEs as well as consumers. The exact loan products that we have for, let's say, the MSMEs is, one is a secured loan product. Typically, you can mortgage your property and get some financing against it. Second is our unsecured loan product. So, 2 very basic box standard products. On the consumer side, we have what we call, let's say, a consumer durable financing. So, typically, we currently have a relationship with Samsung where we allow the financing of the purchase of Samsung mobile phones. We are also on the verge of launching our own personal loan product, which will be aimed at it's primarily just an unsecured loan to a typical consumer.
I want to get into the technology part out here, especially the MSME part where you mentioned secured loan against property. Okay, because I also read on your website that you guys do a lot of this digital property rights. Yeah. So how does that entire process work? I mean, if I'm someone who's based in a small town, tier 2, 2 or 3 town, and I want a loan from Proteom, I would, let's say, go to your branch. Okay, let's just say, or you contact me. How does the process work after that?
So, if we think about the property-based loans or secured loans as they're called, there are two channels. There are intermediaries that kind of Yogi alluded to. Some of them are digital, but some of them are traditional. So a consumer or a customer is likely to have an agent through whom he comes to us, or we have our sales force who actually meets the customer. That's the point of establishing contact with the customer. We have a digital process in evaluating the customer very quickly, which means we gather information, we process them, and we take the customer to the next step if we are comfortable underwriting that risk. So when you started this whole episode, you said risk focused and engineering driven. This is what we mean by risk focus. If you're not going to be able to take that risk of a customer, we are likely to say no very fast. And as we progress in our digital journey, we know that the customer is getting better and better, and the chances that we give a loan increases as we move through the customer journey. A lot of this processing now is digital, which means the customer can either give a consent for bank information, give a consent for bureau, or provide electronic copies of it. It's really dependent on which mode of data transfer the customer is actually capable of doing and is interested in doing.
Let's take a real case scenario out here. Someone who's has an existing business and gives you consent to pick up, scrape all the data which is available online. What would you guys do? You guys would go into, say, his tax filing or his GST return. That makes life quicker, or is it something else?
So it's bureau, it's his banking, it's his tax-related information, it's financial statements, his GST filings. So the fact that India has made all of this data electronically available allows us to incrementally get as much information as we need from the customer. And the amount of information that we process gives us an ability to underwrite a particular size of the loan. So while the product is box standard, if he is going to ask for a 3 crore loan, the amount of information we need to be able to say yes to that is significantly more than the information we need to underwrite a 5 lakh rupee loan. So our systems are built to take what information that customer has, and the size of the loan and the type of risk determines how much more information that we will seek. And I think that's how we underwrite our.
Yeah. You've worked with TransUnion Civil. We've had them on our show. Credit bureaus really are very different today from what they used to be, right? I mean, they've got like a lot of information, and is that like the single point of where the data flow starts? Is that how it works?
To a large extent, yes. Yeah. Almost all loan journeys will start from the credit bureau.
Yeah. So credit score is still a big deal.
The score is yes. I mean, look. I mean, one of the things which I worked on CIBIL was actually building that credit score. So, yes, it's a big deal. TransUnion CIBIL is surviving largely because of that credit score. One of the things that as a company we are proud of doing is we have our own models. We actually don't use any of the bureau scores. We use the bureaus mostly as a repository of the information.
Oh, okay.
But we don't use any of the credit scores. And there are good reasons for it. Fact of the matter is those scores are designed for the entire India. By its very nature, what will end up happening is there are lots of good people who probably get slotted into slightly medium risk or high risk or other things. Now, we are an NBFC. At the end of it, we can't compete on price. But what we do compete on is the fact that we can actually identify a customer far better than any of the large guys out there. Yeah. So our models are designed to be significantly superior to any kind of a standard bureau model first. Secondly, let's say purely from an information perspective. Now, Paddy raised a very interesting point that look, information that you ask for from a customer is proportional to the amount of exposure that you are taking. But in some ways, there's that analog to it, which is about, it's also proportional to the function of whether you are secured or unsecured. Now, imagine, and that's where the challenge of any particular lending company is. Unsecured products in India are becoming more and more like convenience products. So what's the pressure on a lending company? We have to ask as less information as possible to actually compete in the market, because you have lots of people who will say, okay, why don't you just give me your name, phone number and your PAN number and I'll make a decision about you.
Okay.
If you look at it in Samsung product, in the mobile phone financing product that we have, we only ask for these 3 things. That's it.
Name, address, mobile phone number, PAN.
Yes. And sometimes if you don't give PAN, that's also okay.
Huh. And
That's it.
Enough for you to scrape the data and get a profile.
And based on that, we have to make a judgment.
Wow.
Now, this raises a very separate point, which is, in one, I have significantly high information, so I can make significantly better decisions. In the other approach, our idea would be, okay, you have limited information. Now you have to extract as much value out of that limited set to make the best decision possible. So as a company, one of the things that we are really proud of is the fact that we have what we call a feature set. So idea is, let's say take bureaus. Now in bureau, it will give you the same information to everybody who accesses the bureau. Every regulated institution has access to a bureau. The true competitive advantage is who can extract the maximum value. We can extract more than 1 million information value points out of a single bureau report.
Wow.
Yeah.
That's the thing that we have worked on for the past 3 odd years. And that is what allows us that if you give me only 3 information, I am making a decision on more than 1 million points. I just ask only 3 from you.
What's under the hood? Because, if you're able to generate that kind of thing, have you guys really spent a lot on the technology part? Have you got coders, or is artificial intelligence at work, or is there something else that you guys are doing differently from the other people?
It's actually a mix of all the things.
Right.
If you look at it, Paddy is the one who has spearheaded the entire tech revolution in our company.
Yeah.
We have a tech stack which probably can rival almost everybody in the industry, and we are legitimately proud of it.
Wow. Yeah. And you've developed that over the last, and it's also work in progress probably, I guess.
It's still work in progress. Tech is always work in progress, but it's taken us 3 years to be where we are. And I think something unique about that is we run the Samsung business and our pre-crore loan against property business on the same platform. So the 1 million feature set that Yogi talks about is accessible to a 10,000 rupee phone-backed loan, and the same data set is available for me to make decisions on a 3 crore loan. Now, how we use that information is very dependent on the segment that we are underwriting and the size of loan that we are underwriting. But the information loss is not a function, or information generation is not a function of which type of loan. We generate that information for all our loans.
You guys have more techies than, MBAs and CAs at your place. So how does that, if I were just to look at a number there?
I did an MBA, so I have to be very careful about my life choices in the past.
Do you know coding?
I have coded for about 20 years.
Yeah, see, come on, man. You're a coder and an MBA. Come on, you're like the best of both worlds. No, but seriously, I mean, because this is it's a new field. This is like, if you rewind to the 90s when MSME lending was done by banks, it was a headache. I mean, there was risk, there was compliance. Whoever's the guy who has to go out and, he has to make a file. That file has to get processed. Risk has to clear it. Only then will. So that all is changed now, which is the reason why you're more agile than banks, right?
Great.
And that's what I was asking. Has this become so tech focused that banks probably have to figure it out?
I'll say it in a slightly different way. So there is a set of businesses that Yogi pointed out where you have to make decisions algorithmically. Machine learning and ability to make that decision very fast is your competitive advantage in being in that business. There are a set of businesses where you have to automate an enormous amount of data processing and decisioning, like a loan against property. There, your competitive advantage is how much do you automate your data extraction, data processing, and get credit people to look at very specific information as compared to this large file that you have to look through. So in our business, there are problems which are solved algorithmically. There are problems which are solved using automation. So if we can do this entire spectrum, then we can underwrite the entire spectrum of loans for MSME.
Wow.
And the way we think about it is, an MSME is a customer. We are not selling a product. We are solving the customer's financing needs.
Nice.
So the other way to say what Yogi said is, if we can't do secured, we are booted out of 70% of his borrowing.
Okay.
So if a customer is coming to me and I cannot solve 70% of his borrowing needs, then I think I have a very flawed business model, maybe a strong statement,
Yeah.
but certainly doesn't seem like the right thing. So we serve the MSMEs to a point where we want to be a meaningful lender to them.
Okay.
And that's actually a very important criteria in how we select our segments, which goes back to what Yogi said, which is if someone is too big, maybe we will never be able to be the meaningful lender to them and they'll become banks. When they are too small, maybe they are in the microfinance and it might not be the most prudent thing for us.
Nice.
So the way we think about a segment is the segment that we can underwrite and serve, and we become a key player in their balance sheet and we can extract value over multiple years.
Okay.
Yeah.
And the products are designed around that.
Yeah.
And to add to just Paddy in your point, I mean, Paddy actually spent, our entire tech team actually has spent probably more than 2 years trying to automate that entire file.
Wow.
You will be hard pressed to, you'll be surprised to know the file actually still exists. There are lots of people who still give files.
No,
We have-
I know that. Yeah.
But what we have done is how to convert the file into electronics.
Yeah,
Because
yeah.
when we are processing it, we need electronics. So, but we actually get a lot of times physical files which are converted into electronic information.
Yeah, no, that's a reality. That's what I'm going to go with
Yeah.
for quite some time. What does your product look like? So that our listeners can actually figure out that if they want to approach you, okay, what does the product look like in terms of collateral? You said security, loan to values, interest rates, tenures, etc. Can you just let's have a
So,
look at that?
in our secured business, we give loan, let's say the loan size would range from as low as 3 to 5 lakhs to as high as 3 crores.
Okay.
The property that you can mortgage could be a residential house or your office property or some kind of, let's say, commercial building like a warehouse or other things. So multiple different types, or even, land also.
Sure.
So multiple different, let's say, secured properties options are available. Interest rates can range from as low as 11 to 12% to as high as, for secured business, more like, let's say, 18 to 20%.
Okay.
So that's typically the interest rate range.
And tenures? How long are those?
Tenures would range from as low as, let's say, 5 years to as high as 10 to 12.
10 years, yeah.
Yeah.
You go up to 10 years, huh?
Yeah.
Oh, that's
Yeah.
What's your funding like? I mean, where would you? How do you guys manage the liability side of the balance sheet?
Mostly, as of now, we are very strongly funded on the equity side. We probably had India's largest Series A round in terms of equity infusion.
Is that right? Who
Yeah.
was that? When was that?
So that was in 2019, and we have been very cagey about it. So typically, we don't really speak about
Okay,
it.
fine. That's okay. When you say among India's largest, it kind of, the
Yeah.
rates
It's
go up.
also the cultural thing. I think a
Yeah.
lot of the senior leadership comes from a place where I think we are much more head down and hardly, this is like
Under the
nucleus,
radar kind
under
of
the
Yeah.
radar
Yeah,
kind of
yeah.
thing. So to Yogi's point, I think that equity allows us to stand on a strong footing when it comes to rating, when it comes to how our liability partners look at. We have more than 18 liability partners in India.
Wow.
And there are 3 main sources of funding for an NBFC business: direct term loans from large financial institutions. There's a new aspect of co-lending that you partner with large banks to do a co-lending with them. And the third one is we sell our portfolio through transactions and raise. So we
Sure.
do all the 3. And that's how we build our liability.
Let's get to the hairy part. The slightly sticky part, the one that's always in MSMEs is the delinquencies and the NPAs. What's been your experience so far?
I have to caveat this with the fact
Okay.
that we were lucky to be lending post-COVID. So
Dodged a major bullet there.
Yes.
we dodged the bullet pre-COVID, which would have gone into trouble, and
Yeah.
the MSMEs that came out of COVID were probably inherently more stronger.
Higher quality, yeah.
I think there would have been some bias of people who have been coming out of that with a stronger balance sheet, and that probably gave us some kind of tailwind in how we select our customers. And India as a whole has probably had a great credit cycle in the last 12, 18 months.
And clean,
And
thankfully.
that has helped. So I think you have to put that as one of the backdrops. So certainly our NPAs are much lower than what most NBFCs would be in the 3rd year and 4th year of our existence.
Do you guys handle delinquencies different in the sense that when, that you've got these systems that are like seriously good, can you guys predict that some account is going to go bad and you handhold them or anything? Is that possible? Does that happen?
Well, to a large extent, if you look at it, delinquency problem in a typical NBFC is first about prevention. If you come to the cure part, in some ways the damage has already been done.
Correct.
And the second thing is, if you have given the loan and the money is with somebody else, then there's only so much that you can do. And we are a fully regulated company. We actually, even collections, most of it we do in-house.
Okay.
We do not employ external agents, so we do not resort to any of the other, generally, let's say, unsavory tactics that people typically employ. So our focus has largely been on trying to prevent delinquency. And that's simply about, do you select the right set of customers or not? And secondly, do not chase growth for the sake of growth. Have a very prudent approach about growth. So typically, we also will caution our borrowers about how much loan should they take. Even when, let's say, we get a customer who's asking for more and we feel that he can afford only this much of loan, we will have our own sales force at least talk to the customer, educate them that, look, take a limited amount, at least make sure that you are able to service it. If it works out over a period of time, we will actually give you more.
Okay.
Like Paddy said, we are actually interested in doing business with a customer over a long run. But sometimes that means that you have to say initially no or say maybe and then do that business over a longer period of time. Now, from a delinquency prediction perspective, our credit score right up front can at least predict how the customers will behave.
Sure.
Then once they have come on board, we have models which will predict what's the likelihood of delinquency. In a lot of different scenarios, if you look at it, most customers will typically not have one loan. They might have multiple loans. In that case, the whole game is all about who reaches the customer first.
Yeah.
If you can predict who actually is going to default and you make sure that you are reaching him first, chances are he'll probably pay you first. And it's a game which will continue. So we have all of those things in place.
Okay. My last question.
I have a point
Yeah,
here.
go
I
on.
think to Yogi's point, he made this point earlier. We have an ability to segment and build models within the segment, which will outperform the broader model that people use across. 90 branches, the kind of people we have that we have trained over 3 years, the kind of credit processes that we have built, at least on certain parts of business which requires a human intervention. I think for the first maybe 1,000 crores, we would have approved it as a leadership team where the salesperson and the credit person and the analytics person will go through. And so we built a credit culture. We've spent enormous amount of time building that credit culture in the company. And that has resulted in homogeneity in how we approve. If you run 90 branches, you cannot do heterogeneous stuff. So a lot of perspiration has gone into building that credit culture. And some of the people in the organization know that segment for a really extended period of time. So it's a good mix of people who come from a different background, maybe like me, with the people who have actually done that for a living for decades, has given us a differentiation for sure. And it's reflected in our performance, but you should also probably discount a little bit of that because the environment externally has been reasonably good as well.
I want to flip this. This is my last question actually. That if I'm someone who wants a loan, what would be your checklist to me? You know, that I'm, like you said, there are a lot of people now approaching me for a loan. How should I assess these people in terms of, you know, what should I look for when I'm going out for a loan? Any checklist that you guys have?
Typically, one, transparency. What you would generally see, let's say, especially the digital loans, what you would see is a lot of people will give you extremely convenient options, but there will be lots of fine print which will not be available to you. And you should be wary of people who are giving you extremely convenience. Over here, look, there's a reason why this is a regulated business. At the end of it, people have to be responsible and they need to know their fiduciary duty. So once in a while, I'll have some things which I'll tell you, which I think you should know. And that might make it inconvenient for you at that point of time. It's like asking for that OTP.
Yeah.
Now, a lot of people get annoyed by it, but fact of the matter, it works for the protection of the customer. So one is transparency. Be very clear. If somebody is telling you, okay, these are the only things that I'm going to charge you, fine. That's something that you can do. Like take credit cards. You will see multiple different offers for credit cards, this free, that free.
Yeah.
But 6 months down the line, you realize, okay, what's the actual cost?
Yeah.
So that's one part of it. Secondly, look for regulated status. At the end of it, you will find lots of unregulated players. Now, over there, the challenge is they will partner with some regulated players, but the customer, let's say, when he gets into trouble, or let's say when his accounts don't match or other things, what will end up happening is he'll have to keep shifting between the guy who sold him the loan to the, let's say, regulated institution which is holding the loan. Now, getting any of that sorted out is tough.
Yeah. Okay.
So Yogi's point, I think you have to be careful who what you're getting. From a thought process of getting a loan, I think we would need financial information for large loans, banking information for maybe small to medium-sized loans, and GST information for something. So a customer, if I have to give some advice to MSMEs, I would say it's about time that you learn how to provide these informations digitally in a safe and secure way to lenders. Learning that, I think, is quite important, and India has invested enormously in building all these pipes to give this information in a secure and digital way. And the more an MSME learns how to provide this information in the right way, the more I think their access to credit will improve.
Yeah. So, folks, I'll just recap that list for you. Number one is how quickly or conveniently is the lender giving you that money. Second is the regulatory status of that, because I don't know how many of the listeners know, but there was this entire Chinese scam that was going on a couple of years ago, and that didn't really end very well for a lot of people. So please be very careful about who you're taking the loan from, what is the regulatory status. And third, like Paddy said, the quality of information, the quantity of financial information that's being asked from you. Okay? Be transparent and clear about that and what you have to offer to them, because that's what will make life easier for you. Did I get that right?
Yeah. Perfect.
Wonderful, folks. So that completes the serious part of the show. Let's get to the fun part. Recommendations for books, stuff that you're watching, anything. Yogi, first, what are you, reading, watching, anything? You told me you're a fiction fan.
Oh, yeah. I mean, actually, right now I'm watching The Witcher as well as
Season
reading
3?
The Witcher.
You
Yeah.
read? My God. I don't have any people who do that. Read and watch both.
Oh, yeah. I mean,
And
I've
you're
read it even previously.
Oh.
I've read the entire 7 books.
Wow. Good
Yeah.
I've somewhere in my head, I always thought Witcher is a graphic novel, but it's
It's
7 books.
It's by Andrzej Sapkowski. It's
Okay.
a Polish novel.
Yeah. And
Yeah.
the 3rd season just came out.
Oh, yes.
And do you think that Henry Cavill is doing a good job of The Witcher?
Oh, he was brilliant.
He's really
man.
good?
He's brilliant.
Fantastic. So,
I
folks,
mean, I'm sad. The guy is leaving.
easy.
Oh, yeah. Then this is the last season for Henry Cavill.
So who's the new guy coming in? Any idea?
Okay.
They're
what's
probably
his
looking
name?
out for.
No, there's one guy. Let me remember. I mean,
I'm sure our listeners can figure that
Yeah,
out. So the
sure.
Witcher book and series.
yes.
What
yes.
else? Anything else?
I've started watching The Lincoln Lawyer.
Season 2's just come out.
Yep.
Okay, yeah, but I want to wait till the entire thing is over, because they've done like season 2 part 1 now, and then in August comes everything. I'll just wait that out. Did you like the movie also?
Yeah, the movie was brilliant.
Matthew
man.
McConaughey.
Yeah, Matthew
That's also a
McConaughey.
book, right?
Oh, of course. It's
Yeah.
a series of books.
I didn't know that again.
Yeah.
That's good. Chalo, so you've got Lincoln Lawyer, you've got The Witcher. Anything else?
That's about it. I mean, otherwise,
I
Proteum keeps me busy,
I
man.
like that. Come on, man. Proteom keeps you busy. How about that? How badly? But I like the fact that you're doing books and the series. I did that for Game of Thrones. It just gives you totally new perspective on how you're watching it and relating to it. It's really good stuff.
True.
Okay, Paddy.
So somewhere in my company told me something about Murakami. I didn't understand what it was, so I started reading it.
Wow. Okay.
And I don't understand it still.
What did you pick up? Kafka on the Beach, Norwegian Wood.
Yes.
Which one did you pick
I
up?
think I picked up a series of short stories.
Huh.
And I've read about half the book. I think I like it, but I don't understand at the end of the chapter what I.
Yeah, no, with Murakami, I think there's no compulsion for you to understand. I think you just have
but
to
it is
go with
fascinating.
the.
So it's fascinating. So that's the latest thing. But in general, I probably read books which are much more like Cooling of American Mind. That was something I read 3 months ago.
I haven't heard of that. Who's written that? I mean, what?
It's about the state of universities in the US and how
Run that name by me again once. What did you say?
the Cooling of American Mind.
The Cooling of American Minds. Huh?
Yeah,
It reminds me of that scandal that happened a couple of years ago, right? The singer one.
So
Which
this was before that. I think they wrote
okay.
this book about how certain views in universities are extremely strong and how it is hard to actually educate a mind on topics that are by its very nature controversial.
Wow.
And the kind of backlash you will have probing a controversial topic in a classroom now through social media and the impact that it has on a
Interesting, eh?
It's a very interesting book. I think it's certainly worth reading.
Huh.
And in TV, unfortunately, I'm still stuck to the same kind of comedy stuff that I keep
That's
watching.
okay. The Office,
I
Parks and Rec.
I live with my in-laws, so I like to watch Everybody Loves Raymond.
Oh, lovely! I love that. Come on, everybody loves Raymond. How can you go wrong with that? It's like
because I get a feeling that everybody loves me at home, so I feel like the Raymond character.
wow. Man, I haven't had that eclectic a mix of recommendations on our podcast, folks. You had The Witcher, you've had The Lincoln Lawyer, and I missed one, which was the other one that you also read, and that's also a series. You said 3 of them, right? We started with The Witcher.
These 2 only.
Oh, so there's Witcher and Lincoln Lawyer,
Yeah.
and unnamed, short stories by Murakami,
Yeah.
and The Cooling of American Minds.
Yeah.
So, folks, there you go. I think that's a pretty good list of recommendations to keep you occupied. And with that, that is a wrap on this episode of Paisa Vaisa. My guests, Yogendra Singh and Padmanabhan B partners at Proteom. Paddy, Yogi, thank you so much for doing this for our listeners.
Thank you.
Thanks.
Thank you.
IVM